Bell Direct. Julia, it's been a big week so far. What do you make of it?
Nigel, it's been a huge week in terms of production reports, but overall it's been a good one for the Aussie market. We're up 0.4% in the week today, and it does look like we're going to add on to those gains today. In fact, if we have a look at the Australian market, it's actually the fourth consecutive week of gains that we have seen. We have a look at technically, these are the 4 days worth of trading that we've seen. I've just drawn a line at that 5,000 point mark, and you can see while briefly we did go above that 5,000 point mark, but you can see that this has been a strong resistance point for the market this week. So that's really the line in the sand that we're watching, and we're hoping for a sustained break above that psychological point of 5,000 points for the benchmark ASX 200. In terms of sectors, this has been quite interesting because really in 2013 what's been powering along the Australian market are the defensive areas. But really this week we saw a bit of a shift, and those defensive areas were sold off. In fact, we did see red for the utilities space, the healthcare space, as well as the consumer staples area. So all of these defensive areas being sold off this week. On the flip side though, a little bit more money going into the material space. Those production reports coming out from BHP, Rio Tinto, did lend some support to that material sector. So that material space in the black, the best sector of the week, and of course some massive performers. We saw some volatile moves in terms of individual stocks. Perseus Mining was actually down by a massive 28%. The market really quite concerned with its all-in cost of $14.05 given where the gold price is at the moment. We also saw a big move this week for McMillan Shakespeare, which was down by 15%, and of course Treasury Wine Estates, which lost around about 15% as well on the back of its write-downs. On the flip side though, Billabong had an incredible week, up a massive 56% on the back of that refinancing deal, and some of the stocks in the mining space also doing well. Boart Longyear as well as Link up over 20%. So some huge moves in terms of individual stocks. I think from a portfolio perspective we did see some winding down of some of those defensive positions which have been so popular in 2013, and a bit more of the move into that material space.
Now, one stock you are watching today, the Seven Group, maybe a fall there. What's driving that?
Well, we have seen the famous short seller in the US, Jim Chanos, coming out at the Delivering Alpha conference and saying that one of his best investment ideas is shorting Caterpillar. Now, he has cited a number of reasons for that, mainly China and the end of the super cycle, as well as what he sees as some accounting issues. Now, Caterpillar shares actually did see a reaction in the US. During the US session intraday, we saw the shares down as much as 2.6% before ending the session down by 1.1%. Why is this important to Seven Group Holdings? Well, if you have a look at Seven Group Holdings, their WesTrac business has that Caterpillar license here in Australia. We know that that business has been coming under pressure because back in June we did see Seven Group Holdings coming out to say that they expect their guidance to be at the lower end of expectations. Part of that reason was that they were seeing slower sales in the second half related to that WesTrac business. They also announced 350 people being made redundant in their New South Wales and ACT operations, and traditionally Seven West Holdings has a very high correlation with Caterpillar shares. In fact, if we have a look at the two share prices, and I've just got Seven West Holdings, on top, and I've got Caterpillar down the bottom. And if I just overlay the two, what you will see is that they move very much together. They're highly correlated. So the fact that we are seeing Jim Chanos, a very famous short seller, targeting Caterpillar shares, it's all over the news wires, international news wires this morning, and Caterpillar shares coming under pressure. We'll be watching Seven Group Holdings, that's SVW, very closely to see whether we see a reaction in the shares.
Now, Julia, we did have those very positive closes in the US. What are you expecting on our market today, given that?
I think the key for our market is going to be 5,000 points, and if we do see a confident break of that, then we could see some technical buying coming into the market. The SPI futures pointing up 0.4%, and I guess the major thing that we'll be watching is that commodity space, given that we have seen outperformance by that material sector this week. We did see a pretty lackluster performance in terms of copper. That was only up 0.1% in New York, but we did see gold prices rising by 0.5%, and oil prices up by 1.5%. That's good news for the energy space, especially ahead of the Santos production numbers. Now, we're going to be watching these numbers very closely. Santos has been forecasting 53 to 57 million barrels of oil equivalent for 2013. The March quarter was a weak quarter for Santos. They came in at 12.1 million barrels of oil equivalent. But this is a stock I like because of its growth profile over the next 3 years. They have the traditional oil source coming through from the Cooper Basin, but there's also the untraditional potential of that basin, and of course the big LNG projects coming online. So watching Santos this morning, also watching ALS or ALQ Group. This is the old Campbell Brothers. There's been a number of broker downgrades, and it's not very often that you actually see brokers come out with an outright sell on a stock, but UBS has done that this morning. UBS coming out with an outright sell on ALS. We've also seen Bank of America Merrill Lynch coming out with an underperform on the stock, and it looks like UBS putting a lot of red ink on stocks this morning because they've also maintained their sell on Insurance Australia Group. So just watching ALS as well as Insurance Australia Group to see whether we see a reaction today, and watching Santos for those production numbers this morning.
Julia, we heard Ben LeBrun say he thinks we're going to finish over 5,000. What do you think?
I think it is a key test for the market, but really in terms of a driver for the Aussie share market, there's not too much around this morning. So really, even if we do see a break of that 5,000 point mark, I think the key is sustaining above that level, and I think that impetus may come from expectations around earnings season and the earnings season. But it has been a very hard mark for the Aussie share market. We've just been oscillating around 5,000 points in 2013. So we want to see a break of 5,000, but we want to see a sustained break, and we want to remain above that. And I think that might be the challenge for the Aussie share market today.
Okay.